Hi there, traders. This is Brad Gilbert with the Canadian CPI preview. All right, now the CPI numbers, key numbers for the central bank. It is the big number for today across all time zones, right? So you want to have a look at this because it is a little bit of an easier trade. And what we do is you come into the central banks, right? The central banks look at inflation very closely, and it's where they gauge really whether they cut rates, leave rates on hold, or raise rates. Now, last month, they left rates on hold and inflation was at 1.9%. Now, if you just come down into their governing council deliberations, we can actually find out what they were thinking, right? So if I just scroll to the bottom, you don't need to read everything. All right, they were considering keeping rates on hold or cutting by 25 basis points. Now they see some downward pressures on inflation already impacting. So from here, they were close to cutting last month. So if inflation's weaker this month, they will definitely cut rates at their next meeting, right? So that tells us what to look for. So when you come in to look at the numbers, okay, and we're looking at the CPI inflation year on year and month, the year on year number is what the central banks are looking for, right? We saw on their website the previous number was 1.9%. Now the forecast for today, 1.8%, with a range of 1.6 to 1.9. In their deliberations, they've said if inflation falls, or this is my interpretation after 35 years, this is what they're saying. If inflation's weaker, we're cutting rates, right? We were close to cutting rates last time. We thought we'd just hold off. So if inflation is at 1.8 or less than 1.8, if you get a number closer to 1.6, which is the low end of expectations, then you're going to see a big sell off in the CAD, right? That is the easiest trade because that's what the central bank is thinking. Now, if we get a number stronger than 1.8, sure, there's instruments that you can trade to take advantage of that. And that's where you look at your charts technically to work out which instruments would work best for a strong CAD or a weak CAD. But for me, the weaker CAD inflation numbers is the go-to because the central bank are backing up that comment, and that's what we should be looking for. So if you come to your charts, right, and probably go to your daily charts first, right, and you can see very clearly the charts at the bottom here have very clear trends. The ones at the top, a bit more sideways than anything else. CAD Yen, probably a little bit upwards, you'd say. So what's the Canadian central bank saying? Weaker CAD numbers, we're going to cut rates, okay? Which means a weaker CAD, which means Euro CAD goes up. Okay, let me just clear the chart there. Euro CAD goes up, Sterling CAD will go up, CAD Swiss will go down, and these other ones will move as well, but these ones have clear trends. So that's what I would be looking for. Now, when you come over to your hourly charts where you're probably doing your execution, think of the same thing, but this is where some of the trend lines come into play and you can sort of maybe get some better entry levels. Now, Euro CAD, right, is at a good spot for basically buying Euro CAD or selling Euro CAD, right? Stronger or weaker numbers. Now, don't forget, the easiest trade is weaker numbers. It'll be a weaker CAD because the central bank's told us they're going to cut rates. So the upside move here is the best, right? And we do have a trend line there close. So that could be if we got strong CAD numbers, which would be weird, then that could be it. But sterling CAD, right? It's already moving down. Okay. So to me, what we got stronger CAD numbers, sterling CAD's probably in a prime spot to get hit to the downside. That's sort of where we are. And then you look at so these two, I would be focusing on sterling CAD and Euro CAD. Euro CAD top side, sterling CAD downside, right? And don't forget, if we get stronger CAD numbers, it's probably a short-term blip. So don't fall in love with the position. And why? Because once again, if I come back over to the daily charts, the overall trend on sterling CAD is up, right? So we are primed for a clean out to the downside, and you can see it's overbought on the dailies. So if we got stronger CAD numbers, I would still go for a sell on sterling CAD, right? I know Euro CAD's a little bit overdone here on the daily charts, but the numbers, right? The Canadian inflation numbers are fresh. It's like fresh meat, right? Fresh direction, fresh momentum. And on the hourly charts, it's coming off an oversold situation, which primes us for a move to the top side. Now, before you jump up and down and think, okay, well, that's great, all of these instruments will move up or down, whether it's stronger or weaker inflation numbers. What we're trying to work out is what is the easiest trade here, right? And I've got to say, Kiwi CAD, right? We've got a trend line just above the market. That could be well worth a look. Aussie CAD, well, it's probably closer to the downside. So stronger CAD, maybe a trade through that trend line. Okay. So use your trend lines. You're trying to identify the easiest trade setup. And just as before I was sort of thinking of doing this preview, right? I'm looking through the live signals, right? And there's nothing here on the CAD. So what does that mean? Well, it just generally means that the short-term and long-term trends aren't lining up. So if I come down to the main market analysis, you can start seeing the CAD pairs uncertain, right? There's a lot of uncertainty here around what's going on. This would automatically, doesn't stop me trading, but probably gets me to think, okay, I've got a short-term trading opportunity on here. It could go up or down. Use the technical setups to get you into the trades because right now, there's no synergy in the signals, right, with the Canadian dollar. So as the smart thing to do as we get closer to the numbers coming out, just come in, refresh the signals, and we may have a clear signal here on a CAD cross. If you do, that's probably the one to be looking for. All right, so that's a bit of a shortcut to your analysis. Outside of that, as I said, check your daily charts, check your hourly charts, try and work out which pairs are doing what. Okay, and as I said, like at the moment, with that trend line on EuroCAD is actually pretty gorgeous. If we did get strong numbers, I'd love to be selling there. But once again, it's against the overall long-term trend. So, and I don't think we're getting strong CAD numbers, by the way. I think we're going to get weaker inflation numbers. So everything's going to be looking topside. EuroCAD will be back in the range. Maybe Sterling CAD drags the chain a bit. So look for maybe Kiwi CAD, right? That looks pretty good. And CAD Swiss is sort of in the middle of the range there as well. So work with your charts. Think of what the central bank is telling us about what they're going to do, what their plans are. Okay, to me, the 25 basis point cut will be there if we get weaker than 1.8%. If for some weird reason we got 1.9, well, all bets are off and you're probably buying Canadian dollars. And as I just sort of went through some of those charts, you'll find the best instruments to be trading for a stronger CAD, right? I'm thinking weak CAD. Consider both options. Check out the data. This is the range that you need to consider, 1.6 to 1.9. The inflation number is 1.8, right? And the pressure is on the downside because that's what the central bank is telling us. All right, so there we are. I'll see you on the Discord. We can have a chat about that as we go forward and hopefully piece together the easiest instrument to trade. All right, that's what this is all about. Don't go just trading anything. Look for the best technical setup, the easiest instrument. That's where the best money is. All right, low risk, high probability. All right, guys, have a good one. All the best. Cheerio.